I think on the instant moment, I think it's really trade and Turkey. I think when it comes to Turkey, what's going on there is this isn't done yet. With the U.S. rates rising, with liquidity being taken away, I think Turkey really is just exposing some of the weaknesses in a number of other countries out there. We saw Argentina, we could see South Africa. So is this a taper tantrum or a full-blown crisis? We don't think so. But I think the liquidity that we had, the extremely low rates that we had, hit a lot of the ills that were out there. And so we just have to deal with this now. I think Turkey will linger for a while. It's not done. It was nice to see the rally 2 days ago. But I think the give back that we had yesterday was really just saying, hey, this isn't fixed yet, and it's got to come. When it comes to trade, I think markets are reacting positively today. I think that's a good thing. But when I think about trade in China and the U.S., I kind of think of a paraphrase for Tolstoy. And it's not war and peace, but I think it's no war and no peace. I think the administration has a long-term goal about really opening up markets and giving access to U.S. companies which have been denied. And I think that's a long-term process.
Sure.
And it's not going to be resolved by some lower-level trade mission that's coming to the U.S. right now. It's helpful, but it's not going to resolve anything.
Jason, let's break that down into two longer-term trends that we follow. One is trade and whether that goes positive or negative for the markets. The other is earnings, which continue to build. How does this play out? How do you see these two forces kind of fighting it out in the markets?
Yeah, you know, we actually kind of putting that the trade issue and the Turkey issue into the risk camp and the really long-term fundamental story here of the ongoing expansion, the economic and profit story being really the ultimate driver. Our base case is that second one is the one that kind of carries us forward. Maybe a little bit of headwinds from the trade policy changes, but generally still that expansion and the profit growth cycle being very robust at this point in time and driving equities higher, carrying even these higher valuations to even higher levels of future prices. The other two items are, you know, the trade and the Turkey situation are really just kind of near-term risks. They'll rise to a certain point of really feeling like they are ultimately important on one day, and then recede as part of those, you know, risks actually kind of feel like they're actually a little bit more nuanced because policymakers actually respond in a better direction the next day. Ultimately, it's that earnings growth that matters. We're lapping at, you know, pretty solid double-digit numbers this year. I mean, this last quarter, 24.6% earnings growth for the S&P 500 was a really nice number to see. Propped up by taxes and other factors, but man, these are great numbers for equity owners, and the stock market is to some degree feeling that it'll probably be feeling it even stronger once we get past a couple of these risks.